Hey, what's up, guys? John here. They're getting ready to rug pull the entire labor market in America.
More American workers are hitting the picket line calling for higher pay and better benefits.
The United Auto Workers strike is now in its third week, the union expanding its historic walkout.
Another potentially massive labor strike across the U.S. could start in about 24 hours. Tens of thousands of healthcare workers at Kaiser Permanente are threatening to walk out if a new contract is not reached by tomorrow's deadline.
And when you connect dots and when I show you what's happening, you're going to be shocked. Over the next 12 months, we're going to see likely millions of jobs being pulled, and with it is we're going to see the massive push towards automation, robotics, technology, and I believe we're going to see the biggest buying and investing opportunity that we've ever seen in U.S. history. I'm going to break it down for you clearly with verifiable facts because this is just unreal. There's no way that this is not all set up for this. Please hit the like button. YouTube will share this content, educate other people about what's really going on. And if you want to fix your credit to position yourself for the greatest wealth transfer of all time, which we're in right now, book a free call below at GreatCreditFast.com. Maybe you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions. You have an issue on your credit report. Do not ignore it. Book a free strategy session. Get some advice on your specific situation. At least you get a roadmap and an idea of what it looks like to fix your credit. Because when you start to see this economy pull back in great fashion, you're going to want to be able to get access to credit to invest in distressed real estate, grow a business, fund a business, buy a car. You're going to want to make some moves, and it's very hard to do that when banks are tightening up lending on high-risk borrowers that have bad credit. So book a call below. Put yourself in a really, really strong position during a world of uncertainty. Take a look at this. So Jamie Dimon says that he sees AI allowing people to basically work 3.5 days a week. 3.5 days a week. How are we going to work 3.5 days a week when we have $17 trillion in outstanding consumer debt, over $1 trillion in student loans, $1.6 trillion in auto loan debt, $1.7 trillion in student loan debt? You have massive, massive debt loads in America with record high interest rates. How are people going to work 20% less than what they're working right now? Well, they're not, right? Because what's ultimately going to happen is they're going to slowly start pushing us towards a universal basic income type of world. And right now they're in the process of disrupting literally every single major industry, whether it be the real estate industry, whether it be healthcare, whether it be automotive. All the big industries right now are getting completely disrupted. Here's what I mean. So, National Association of Realtors, they're in this huge lawsuit right now where you have all the large brokerages, Coldwell Banker, Keller Williams, you have all the big dogs are getting sued right now by the National Association of Realtors. They're settling some of these companies $55 million here, $85 million here. Redfin just walked away from the National Association of Realtors. What does this mean? That means that the Redfin agents are no longer going to be able to use the realtor trademark. So what's going to happen? The National Association of Realtors, they are getting sued because they say that, the buyer's agent commission should not be paid by the seller, and that they basically have a fix on the real estate transaction. Now, many people would agree with that. They would say, yes, I agree. If you're selling a house, you don't want to pay 2.5% to a buyer's agent to negotiate against your best interest. Sure. But when you look at what the National Association of Realtors is doing right now, they're investing in another company called Fractional, which is essentially Jeff Bezos-inspired type of company where tons of investors pull in and buy individual houses and rent them back to the general public. Well, they're investing heavily in this company. And so what I believe is ultimately happening right now is that the National Association of Realtors, all these brokerages are going to get completely disrupted, allowing an opportunity for private equity investors, large corporations to step in and buy tons and tons of houses. I mean, for example, MetLife Insurance and CNBC came out and said by 2030 that 40% of all single-family homes will be owned by institutional investors, right? That's an 800% increase from where it is right now, where right now it's at 5%. So when you're looking at these trends, they're saying, oh, they're leaving because of sexual harassment allegations. National Association of Realtors had sexual harassment allegations. Which company does not have sexual harassment allegations? Honestly, large company. I mean, no matter if you have thousands of employees, I'm sure there's some type of sexual harassment allegation somewhere in that company. There's some type of drama, there's some type of chaos, there's something going on in all large companies. So unfortunately, it's just human nature that there's going to be problems when you put a lot of people together, right? Some of it is true, some of it's fake, some of it's they're just trying to basically extort money from companies, whatever it may be, who knows. But at the end of the day, to say that you're walking away from the National Association of Realtors because of a sexual harassment allegation is ridiculous. And so they said, we paid more than $13 million in dues. Look, what is happening right now is not a coincidence. National Association of Realtors. Then you have Kaiser. Kaiser is they're serving 13 million patients. 13 million patients, 75,000 employees, biggest strike in healthcare history. That's happening right now. And they even said right here that in under a decade, healthcare will see physicians, smart home devices, and mirrors, toilets to diagnose diseases, while robots will take care of patients. Everything will be fully digitized, right? So they're working to disrupt the real estate industry. They're working to disrupt the healthcare industry. If you look at the UAW strike, right, this is happening right now. They're saying, oh, you know, the employees at Kaiser, they deserve more money. The employees at Ford, they deserve more money. Well, if you just type in what will the auto industry look like by 2030, they say without government legislation and incentives, electric vehicles might only make up 10% of new vehicle sales by 2030. A complete ban on sales of new cars with internal combustion engines could turn some markets almost 100% electric. I mean, look at this, like falling costs will for the first time make EVs as cheap or cheaper to buy both and run as petrol cars in every market. But when you look into this more, and I've done a video on this just yesterday, 2 days ago, when you look into this, they're saying that supply chains for these combustion engines are going to greatly, greatly fall by 2027. They said that mechanics, these industries, just in California, they're going to lose 42,000 mechanics just because of the disruption happening in the automotive industry. So this industry is already getting ready. It's already in the process of massive disruption. And when you look at, you know, for example, Gavin Newsom, he's saying, you know, $20 per hour minimum wage starting in, you know, 6 months, call it 6 months, April 1st, 2024. He's pushing these fast food chains into automation. Because if you think about it, they could buy, you know, a Miso Robotics, you know, Mr. Flippy, the burger flipper. I mean, you could buy those cheap. You could rent them for $3,000 a month, right? So you can get these things for like 20, 25K, and you could have these things, you could have 2 or 3 of these working at an entire restaurant. Stable, no workers' comp, no lawsuits, no sexual harassment situation, no problems, because it's just technology and robotics just running all day long. You look at this is what they're pushing for. They're pushing for massive automation across the entire economy right now. Chipotle, for example, 1 hour ago, they're testing automation for burritos. I mean, if I owned a fast food chain in California, would I want to have people there, or would I want robotics? Honestly, I want robotics. The reason for it, California is an extremely litigious society. They have so many lawsuits, so many problems. It's just a very, very challenging and expensive market to operate in, a lot of theft. And when you have technology and robotics, it's easier to monitor, right? And this is just looking at the numbers, and this is what these large corporations are looking at also. They're not looking at, you know, people's feelings and people's livelihoods. They're looking at what makes the most sense financially, right? What makes the most sense financially? And this is what they're going to be doing. They're looking to completely restructure the entire economy. Like, look at universal basic income, for example. There was only 11 cities doing UBI in 2021. Now there's 82 cities across 29 states. That was as of last year. So this number has dramatically jumped from here. If you could just, you know, use your imagination, you go from 11 cities to 82 cities inside of 1 year, right? And we're pushing almost a 1 year anniversary on this date. So I would bet that this is well over 100 cities by now. But that's speculation. But at this, you know, at this type of rise, I mean, that kind of shows where it would likely be headed. But then you look at where consumers are, and this is why it's so perfect for their push right now. So consumers, this is the current savings rate, 0.75 trillion, 0.705 trillion. During 2020, February 2021, or February 2020, consumers had 1.58 trillion. So they have half of the money today that they had in February. Half of the money today. Then you factor in record high inflation. You factor in these gas prices, right? If you look at where gas is right now, and we have, according to Reuters, the U.S. currently has just 17 days of supply left in strategic petroleum reserves. This is roughly half of the historic average, 33 days dating back to 1990. Meanwhile, oil prices are still almost 30% above the target price for the U.S. set to refill. Tomorrow, OPEC meeting kicks off to discuss ongoing production cuts. The SPR situation is one of the largest strategic weaknesses of the U.S. Well, when you look at it, they're increasing the cost of living, they're increasing the cost of gas, they're increasing, you know, you have student loan bills that are due starting yesterday. You have all these things that are changing, and then it gets even more interesting because mortgage rates right now, if you have bad credit, you're looking at 8.9%, right? So if you have great credit, let's say 800, you're at 7.844%. That's still expensive, right? Like people, if you're sitting at like a 640 credit score and you need to borrow money, I mean, it's going to be very challenging because lenders are already tightening up. So it's like it's already expensive if you have great credit, but at least you'll have options in most cases to get funding. But Getting funding, like people think, oh yeah, I have a 600 credit score, I'm going to get, no, you're not getting anything, no data available. Like you need to have great credit. But if you look at this, right, let's say the average credit score in America is 698, you're looking at 8.62%. But here's how this whole thing is going to factor in. This situation, we're hearing about this all the time now. All the time. And it said that this may increase mortgage defaults and prepayment risk, triggering adverse selection in the type of loans that are sold. So when you look in a situation like what banks are going through right now, a lot of regional banks had problems 6 months ago. You're hearing more and more and more about this. When you look at these problems, right, and then they're walking into $2 trillion in corporate debt that has to get refinanced next year, $1.5 trillion in commercial real estate over the next 12 months, $2.7 trillion by 2027. These banks are going to walk into more and more and more issues. So what are they going to do? They're going to be very careful about lending in these markets that they think are high risk, coastal cities. And when people need to refinance, they need to get additional loans or lines of credit. It's going to get harder and harder and harder over the year or so to come. Glenn Kelman even said this in 2021. The same guy that's commenting here, the CEO of Redfin, said that left the National Association of Realtors, saying it's going to get much harder to get funding and financing and insurance in these markets. And that's what's happening now. They're saying right now that Florida is overvalued by 50 billion, and this is because of same exact buzzwords, right? And you look at the same thing here. They're going after everything. Like if you look at, they were talking about federal rent control. They're looking at Florida. Even Florida is they're putting a bill aimed to require air conditioning, requiring landlords to put in air conditioning. California signs a new law to bolster eviction protections for renters 2 days ago. So it's going to be a full-fledged attack on all large industries. And so when we're looking at where the labor market is right now on consumer debt, and you start to look at these problems, it becomes very, very clear that we're going to see a mass transfer of assets. We're going to see a lot of people forced to sell when times get tough. And you want to put yourself in a position to kind of shield yourself from this crazy new world, this crazy new normal we're walking into, by having cash, having very, very low consumer debt balances, ideally zero consumer debt. Having, even if you have a really, really nice car, but it's kind of expensive, maybe it makes sense to just sell it and get something that is very cheap and easy to maintain with no car payment. Putting yourself in just a really, really strong position during these uncertain times is going to be something I think you're going to thank yourself for later. And if you have any credit issues, you want to position yourself with great credit, we'd love to give you a free consultation at my company, GreatCreditFast.com, below in the description. And what do you think about this? Drop it below. We'll have a conversation. I'll catch you guys in the next video.